Hi everybody, in this example video we're going to go over exercise 5.9, which is going to cover how we journalize entries into both the revenue and the cash receipts journal. So it says that transactions related to the revenue and cash receipts completed by our company during the month of March are as follows. So again, always looking for kind of those buzzwords and phrases. Anytime we see issued invoice, we know it's going to go into our revenue journal. Anytime it says received cash, for whatever reason that is, that's going to go into our cash receipts journal. It also tells us that for our cash receipts journal, we're going to use the fees earned having a credit column, accounts receivable having credit column, and cash having a debit column. And they also want us to place a check mark in the post-reference column to indicate when the accounts receivable subsidiary ledger should be posted to. So in the first one, it says March 2nd, we issued invoice number 512 to Santorini Company for $905. So issued invoice. Anytime we see issued invoice, has to go to our revenue journal. We're sending our customer a bill because they owe us something. So we come down to our revenue journal, March 2nd. They told us we issued invoice 512. And they told us, again, that we are issuing invoice 512 to the Santorini Company for $905. So remember, with our revenue journal, there's only one column that we have because every single time that we are utilizing the revenue journal, it's affecting the same two accounts. It's always going to be debiting accounts receivable, and it's always going to be crediting our fees earned. So our debits and credits still equal here. Under the account debited, we want to know whose accounts receivable is being debited. In this case, it's Santorini Company. And they told us that we need to put a check mark in the post reference if we would post this transaction to the accounts receivable subsidiary ledger. Remember, anytime accounts receivable is affected for whatever reason, whether it's debited or credited, we have to post it to the accounts receivable subsidiary ledger. So since this does affect accounts receivable, we would post that check mark there to indicate that that transaction would have to be posted to the accounts receivable subsidiary ledger. In the next one, it says we received cash from CMI Inc. on account for $205. So this one can be a little confusing because we see received cash, but we also see that on account phrase. Remember, the only time that we post it to the revenue journal is on the day that we've actually provided the service to the customer on account. In this case, we're finally getting paid for the cash that we've been waiting to receive. So on March 4th, we are receiving cash, and we're receiving cash of $205. So our cash has to go up. Again, don't forget, even though you're using a special journal, the same rule applies that your debits and credits have to equal. So always double check that you're affecting a column that's a debit column and a column that's a credit column. Notice that we only have one column that's debit, and that's cash, because the only thing that's going into our cash receipts journal is when we're receiving cash for any reason. So our debit's always going to be to cash. Now we have to figure out what our credit is to. So why are we receiving cash? We're receiving cash from CMI Inc. on account, which means, remember, on account, there's only two account names that have the word account in it: accounts receivable or accounts payable. And the first word of that sentence is received. So accounts receivable is being affected. They are paying down their accounts receivable balance. Go over here, account credited. So we have two columns that have credits, so either fees earned or accounts receivable. Accounts receivable is the one that this transaction is affecting. So we want to know whose accounts receivable is being affected, and that's CMI Inc. Always ask yourself the question, does this transaction affect accounts receivable or accounts payable? Yes, it affects accounts receivable. If it affects accounts receivable, that means we'd have to go to our accounts receivable subsidiary ledger, and we'd have to post that check mark to indicate that, in fact, we have posted this transaction to the accounts receivable subsidiary ledger. Always check yourself at the end of every transaction. Have you effected a debit and a credit, and do they equal? We have. We debited cash for $205. We credited accounts receivable for $205. On the 8th, we issued invoice number 513 to Gabriel Company for $220. So issued invoice, we know we have to go to our revenue journal. So we're going to our revenue journal on March 8th. Invoice number 513. And again, they told us that who we provided services to was Gabriel Company for $220. So $220 goes in here. And whose accounts receivable? It's Gabriel Company. Have to post that reference because it affects accounts receivable. Remember, anytime it affects accounts payable or accounts receivable, we have to post that to our accounts receivable or accounts payable subsidiary ledger. Next one, it says we issued invoice number 514 to Yarnell Inc. for $845. So on the 12th, $845, and it's to Yarnell Inc. Ask yourself the question, does this transaction affect accounts receivable or accounts payable? It does. We have a value in the column that's affecting accounts receivable, which means that it has to be posted to our accounts receivable subsidiary ledger, so it gets that check mark. On the 19th, we received cash from Yarnell Inc. on account of $555. So anytime we've received cash for whatever reason has to go into our cash receipts journal. So on the 19th, what we are in fact receiving is cash of $555. Why? We're receiving cash on account. So that means that our accounts receivable account for Yarnell is going down by $555. Whose accounts receivable? Again, Yarnell Inc. Accounts receivable is going down. Ask yourself two important questions. Do your debits and credits equal for that transaction? Yes, we debited cash for $555. We credited accounts receivable for that same amount. Then ask yourself the question, does this transaction affect accounts receivable or accounts payable? Yes, we have a value in that accounts receivable column, which means that we would have to post that transaction to the accounts receivable subsidiary ledger for Yarnell Inc. On the 20th, it says we issued invoice 515 to Electronic Central Inc. for $195. Issued invoice has to go into our revenue journal. So issued invoice to Electronic Central for $195 on the 20th. Does this transaction affect accounts receivable or accounts payable? Yes, because we know every transaction that goes into our revenue journal is affecting accounts receivable. So every single one of those transactions has to be posted to our accounts receivable subsidiary ledger. On the 28th, it says we received cash from Marshall Inc. for services provided of $160. So on the 28th, we're receiving cash. So we know our cash has to go up. It's the only column that we have a debit for. But why are we receiving cash? It does not say that we're receiving cash on account like it did on the 19th. It says we're receiving cash for services provided, which means that on the 28th of March, we provided services to Marshall Inc. and they paid us on that date the $160. So that means it has to go into our fees earned account. So what account's being credited? Fees earned. We do not put Marshall Inc. because that's not going into a subsidiary ledger because they did not pay for those services on account. Do your debits and credits equal? We have a debit to cash for $160. We have a credit to fees earned for $160. They equal. Does this transaction affect accounts payable or accounts receivable? We have nothing in that accounts receivable column. There's no accounts payable affected, which means it does not get posted to our accounts receivable subsidiary ledger, so that does not get a check mark. On the 29th, it says we received cash from Santorini Company for invoice number 512 of March 2nd. So we're receiving cash. If we look back here from March 2nd, they said they're paying off the invoice number 512, and that invoice number was for $905. So that means that we are receiving $905. And why are we receiving that money? Santorini is paying off their invoice, and an invoice is a bill that they sent because they owed it to us, so they're paying off their accounts receivable. Whose accounts receivable is being paid off? Santorini. Does this transaction affect accounts receivable or accounts payable? Yes, it does. It affects accounts receivable, so we would have to post it to our accounts receivable subsidiary ledger. And finally, on the 31st, it says we received cash from McCleary Company for services provided of $85. So we're getting $85 in cash. We know that it has to go into that cash column because it's our only debit. And it says we received $85 for services provided that day. So that goes into our fees earned account. So that means the account that's being affected is fees earned. We don't put in McCleary Company because we're not tracking customers that pay us cash on the day that we provide them a service. We're only tracking them when they owe us money sometime in the future for services that we have in fact provided. So at the end of the month, we would total up each column. So we have $245 that would be credited in total to our fees earned account in the general ledger. We would credit accounts receivable in total in our general ledger for $1,165, and we would debit cash in total for $1,910. So that means we would go into our general ledger, and in the cash ledger, cash account number 11, we would post a debit to cash for $1,910 in total. We'd then go to our accounts receivable general ledger, and we would credit accounts receivable in total for $1,665. And then we'd go to our fees earned account ledger, and we'd credit it in total for $245. Below, we would post the account numbers of the from the general ledger of the accounts that we just updated. And we would do the same here. We would total up our revenue. In total, we provided $2,165 of services on account. We'd go into our general ledger, we'd go to the accounts receivable general ledger account, and we would debit that account in total for $2,165. And then we'd go to the fees earned general ledger account and credit the account in total for $2,165 and post those account numbers below the total to indicate that that total has in fact been posted to the general ledger.